Yeah, I really do think this is going to crack here. Look at all the indicators that suggest that it's going to. Let's take a look just here at the industrials. I want to teach you something about an indicator up at the very top called ADX. That's average directional index, always shortened to ADX. Now, if you look at it, look up in the upper right-hand corner. The ADX is composed of two different indicators. One's called DI plus, directional index plus, and that's the green line. Then you see a red line, that's a DI minus. And the DI minus is, guess what? Directional index minus. And you can actually trade it when they cross each other, you buy, and if it crosses the other way, you sell. But to tell the truth, to me, what's way more powerful than that is you'll notice that the sum of those two is the black line. And you can see that the black line went all the way over 55 and is turned down. We call this the bishop signal, and it suggests that the bull market is over in the Dow Industrials in this case, but really in the stock market in general. Now also notice how the DI plus, which is the green line, is starting to collapse. DI minus hasn't really yet gone up, but the DI plus is collapsing. So this is a leading indicator telling us that the bull market is over, because ADX is a strength of trend indicator, and you can see that it's peaked. Now, it hasn't collapsed a lot, so I may be a little premature on this, but I'd rather get out a little too early than a little too late. Now, not that I'm looking for a big bear market. No, please, no collapse-orama. No, this is the collapse that we're all going to be starting to eat grubs and vegetables and all that sort of stuff. No, that's no good. You can see I journal. What can I say? All right, let me go back. So what happens anyway is the other thing is take a look over here at the RSI. That's this green thing here. And the green thing is not making new highs at the same time the price of the Dow has made new highs. In that case, normally we get at least a several-day correction. So I'm still pretty nervous about this market. Hey everybody, Courtney Smith here with your weekly video newsletter, TradeSmith, and let's keep on going here. Lots to cover. This is the most important thing you can possibly imagine in this whole presentation. It's downhill from here. Please read it and understand it. Okay, S&P. I told you about the Dow. Let's take a look at the S&P, which is probably more indicative of the market. I've already shown you how the RSI is not looking that great. Notice the purple predictor, not that great. Down at the bottom, you can see we also got a bishop signal on the ADX. I just kind of put it down at the bottom there. Still not liking this market right now. Dow Jones, we already covered that. Okay, here's the NASDAQ. Similar situation, a little bit better, but still not that great. Now, normally speaking, when we get these little consolidation patterns that we've set up here, normally the market will break out in the direction of the trend. So I'm not going to liquidate any trades right now, but I do think you need to be moving your stop losses much tighter. And this is not a time to get aggressive anymore. This is a time to not put on any new trades. Seasonality is bullish. This is our seasonality indicator here. We're in the seasonal period. We're making higher highs and higher lows. If it breaks that red line, then I'm out of here. All right? Now, right now, through this whole big bull market, through most of this big bull market we've had since beginning of November, I've been putting on double size positions. Man, that makes it so that you're crushing the market when you combine this seasonality. Now look up at the yellow lines. The yellow lines show you that we're in a consolidation period, and really we should consider following whichever way it breaks. Price is the final arbiter of any analysis. If it breaks to the upside, fantastic. It means that instead of all these problems that I'm raising, little problems, there's no big problem, but all these little problems, instead of causing a little 2 to 5% correction in the market, they've been resolved by simply going sideways. Hopefully that's what happens. If, on the other hand, here on the IWM, if we break through the bottom of that consolidation pattern, that would suggest we're going to go down to that 130 level, which is critical. Seasonality, you can see I've been expecting a dip. Now we're towards the end of the year when we're supposed to be rallying. That's actually quite bullish. We made it through the negative seasonality by simply going sideways. Now we're in the Christmas, New Year's period here. This is normally when the market starts to show a lot of strength this week. And since we didn't go down when seasonally we should have, that actually suggests this market could really pop this week on light volume. The yield curve, this is something I've been talking more about because you can see it dropped sharply a year ago. And it doesn't mean that the stock market's going to drop precipitously in January into February, but what it does mean, it's going to be really difficult for the market to rally strongly. Really difficult. We're going to have to wait really till the fourth quarter of next year before the yield curve starts to provide a little impetus to the upside. Asset allocation, fantastic. But look what happened to the risk indicator. Collapsorama. What it's saying is that the market is going into safety. They don't want to be in risky stocks anymore. They want to be in consumer staples. They want to be in boring stocks that hold up in bear moves. This is one of the hidden indicators that I'm showing you that shows the internal dynamics of the market. They're running for cover right now. Global shares, who cares? Who cares? Greek market, I still gotta like it. But it hasn't been that good to me now for a couple of weeks. All right, Japanese shares, though, still like it. We've got that little consolidation going on up there. I think we're going to break to the upside. So, gotta stay long Japanese shares. Monetary policy, fiscal policy, both highly supportive of Japanese shares. But remember, those same policies are very negative for the Japanese yen. And so you need to use DXJ because that hedges out the yen collapsing, which it has been, as I told you. Bonds. Now, this is very interesting. Notice the bonds have consolidated like so many things have in the last week. But notice that the RSI keeps creeping up and up and up, and it's still low. It hasn't even got to the 50% line, which is the dotted line across the middle of the chart, right in here. But if this market continues to, if the RSI continues to go up and the price goes sideways, that's actually creating the conditions for a big bear move. Because no longer is the market oversold. It now has lots of room to collapse on the downside. So when the RSI goes up a little bit, that can be bullish. But if it goes up a lot and the price doesn't, that actually is creating a potentially bearish situation. All right, bond key factors. The only one that matters is the blue one right now. And that one actually started to come down a little bit, suggesting that we might see a rally in the bonds. The dollar, wow, have I kept you focused on how to make money? Listen, sometimes you just gotta, you gotta be monomaniacal. It's a bull market in the dollar, don't you know? So be long the dollar. We got a little consolidation there. I think what's gonna happen is we're gonna break to the upside here. Now, if the bonds rally a little bit, then we could move down a little bit, but it'll just be a correction in what is a major bull market. Stronger economy, stronger interest rates are going to create a flood and have been creating a flood of money into the U.S. Dollar. Gold, well, if the dollar's strong, then gold's going to stay weak. So really, got to stay short gold. I got you short a long time ago. You should be making a lot of money right now. Don't listen to the doom and gloomers. Now, one thing, though, that gives me a little bit of hope is our three indicators are pretty much all neutral now. After being either 2 bearish and 1 neutral or 3 bearish even a couple of weeks ago, we're now starting to see some maybe bottoming here. Right now, 3 neutrals. Oil, you know me, I think I've been pretty much wrong on this, but nonetheless, we're not making higher highs anymore. We're making lower highs. So maybe we're finally getting to that consolidation. I thought we wouldn't get above 52. We did get up to 54 and change, but the market's staggering, and I still think that there's a big influx of oil coming into the market, and demand has not increased that much. The whole agreement with OPEC, nobody's going to follow it, really. They can talk all they want, talk. It doesn't matter. It's all BS. They will continue to pump as much oil as they possibly can because what? You think Venezuela doesn't need the money? You don't think Iran doesn't need the money? You don't think Iraq needs the money? You don't think Syria needs the money? I mean, come on. Other than maybe Saudi Arabia, they all need the money, so they will pump as much as they possibly can. It's one of these deals where they say, "Oh yeah, we should cut our production. You first," but none of them are willing to go first. So I think it's going to break down, and we're going to start to see oil come down. Now later, with the global economy, I'm building a thesis that the global economy is going to do much better in 2017. Still not sure of that. The good news is I've got tons of indicators that suggest a stronger economy in 2017, but I'm still worried about a potential trade war triggered by our new president, Donald Trump, creating a trade war with, let's say, China, Mexico, Canada, blah, blah, blah. And that might dampen down international trade, which would dampen down the global economy. If there is no trade war, though, look for a stronger economy, which would increase the demand for oil. The problem, I'm sorry, I'm going into detail here. The problem is that supply can increase more and more quickly than demand can. So I think there's a cap on the price of oil for probably another year or so. All right, everybody, love having you here. Hang on just a second and we'll get into all of our paid up members who, of course, get all the super cool additional insights, analysis, and specific trades. But freebies, love having you here. Hang on, we'll talk to you later. Hey, Courtney Smith here, and I want to tell you about TradeSmith, our video weekly newsletter. Yeah, I've been bringing the hammer to the market for over 45 years, and now I share that expertise with you every week in a terse, to the point video newsletter. Now, see, back in the old days, I actually ran the #1 stock newsletter in the United States for 5 years, according to the Hulbert Financial Digest. I crushed the market. I went where the action was, and for 5 years, when I did this newsletter, it was the #1 rated most profitable newsletter there was. There's a picture of it. In addition, I also ran the #1 mutual fund, growth mutual fund in the United States. There it is. There it is. There's Morningstar. Look at that chart. Ooh, that's a beautiful looking chart there. And I was #1. Well, and no losing year in 40 years. I've been doing this for a long time, and I want to share that expertise with you so that you don't have to go through 40 years of experience. Trust me, I bled a lot in those 40 years, but what that means is I've led a lot, and I've shown tens of thousands of people how to make money in my career. Now, first of all, in this newsletter, we're going to cover the key markets. We're going to talk about the U.S. stock market. We're going to talk about global stock markets. We're going to talk about foreign exchange. We're going to talk about futures, yeah, even commodities, oil. We're going to talk about bonds so that this is a one-stop shop. You can come here. You don't need anything else. We're going to use options. Whenever we have the opportunity to leverage up and turbocharge our profits, we're going to do it. Now, this is totally unique analysis. You think that if I did what everybody else did, I would have those #1 track records? Of course not. What I have to do is unique. That's the only way you can beat the competition out there year after year after year. So, deep fundamental analysis. I'm going to talk about this on 2 levels. First of all, fundamental analysis of the markets, monetary policy, economic policy, trade flows, all of those sorts of things, but on a very, very deep level. I've studied macroeconomics for decades now, and I've been using that analysis for decades. In addition, we look at deep fundamentals of individual stocks when we look at our stock market trades. That is to say, we're going to tear apart these companies. I focus a lot on a few key metrics. One of them, strong earnings growth. In the final analysis, that's the thing that really drives stock prices. Another factor that drives stock prices is when earnings per share estimates are going up. That is to say, when a broker changes their estimate from 10 cents a share to 20 cents a share, they call their clients buy the stock, and the price goes up. So those are the 2 most powerful techniques that affect the price of a stock. And I'm going to tear that apart and show you why I love these companies. But at the same time, just because it's a great company doesn't mean it's a great stock. We need to be able to time these things and buy them when it's good to buy and sell them when it's good to sell. So I'm going to show you unique technical analysis you can't get anyplace else. It's a combination of a number of indicators. Some of them you might have seen elsewhere, but I use them in a unique way. Others, you've never seen them anyplace else. I'm the inventor of those techniques. But you know what? Even the techniques that I use of other people, I use from people who are friends of mine. Yes, I've been around this market so long that most of the greatest technicians in history have been friends of mine. In addition, I'm going to show you ninja trading tactics. How are we going to get the best fill? How do we enter the orders? Are we going to use stop orders, or are we going to use limit orders or market orders? All of those sorts of things I'm going to give you in our weekly video newsletter. Key benefits of the newsletter. Number one, killer analysis that you're not going to find anyplace else. This is unique. This is unusual. And I have to make it unique. I have to make it unusual because that's the only way I can be number one. By the way, I was voted number one bond and gold market timer for 3 years in a row by Timers Digest. You can only do that when you have unique and killer analysis. Killer trades, because once we've got the analysis, we need to make money from it. We need to turn it into an actionable item, something that we can actually do in the real world. So I'm going to give you killer trades. I'm going to tell you specifically where to buy, specifically where to sell. Nothing is left to the imagination. I'm precise. It's also to the point. I don't want to waste time. I don't want to waste your time. I don't want to waste my time. So no BS, no stories, no jokes, no nothing. Right to the point. Here's what to do. Here's why to do it. And here's how to make money from it. So I'm going to keep it terse. It's about 20 minutes per week, right to the point with all the analysis. I show you the charts right on the screen so you know exactly why I'm doing it. You can double check my work. If I show you an indicator and I say this is what it means, I'll show you the recent past and you can see if it worked recently. Of course, it does. Now, actionable, that's a key thing. So many analysts out there, it's blah, 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 blah. It seems to me that all they want to do is they love the sound of their own voice. They want to sound smart. You know what? I don't care if I sound smart. That's not the point of the exercise. I'm not here to try to impress you. I'm here to help you make money. I'm doing all the same trades that I recommend to you. So trust me, they better be profitable. Easy. Like I say, I'm going to give you the exact entry, exit points. It's going to be super easy. Just type them into your brokerage platform, and there you go. It can't be any easier than that unless I came over to your house and typed in the orders myself. It's only $47 a month. This is a peanut for what you're getting. This is killer analysis, killer trades. This is something where, you got to stop and think of it this way. Can I make $47 more per month if I subscribe to this newsletter, or am I not going to make $47 per month? You know the answer. The answer is, of course, you're going to make at least 47, probably 10 times that, probably 100 times that, probably 1,000 times more than the $47, depending on the size of your account and if you follow all of my trades. So also, I want you to have a lot of free bonuses right up front. As soon as you sign up for the first month, I'm going to give you thousands of dollars of free bonuses. A lot of them are options related because I'm an owner of a company called Options University, and we've got some great education there, from option beginner to pro in just 4 nights. I like using options if I can because they can turbocharge the profitability. They can also be used to cut risk at the same time. That's a pretty awesome combination. So I'm going to give you from options beginner to pro in just 4 nights. Great introductory course for an option beginner. I'm going to give you how to quickly and easily master the top 20 technical indicators, some of which I use, but of course, as I say, I often use them in tricky new ways, and I'll show those to you as well. Retire rich with 10x income. I love this course. Really, isn't that what we all want, is to retire rich? And hey, why retire rich? How about retire rich and early with 10x income? This is an awesome course. You're going to love this course. It's going to get you focused so that you can retire rich. The secret is out with gamma trading. Now, this one's more advanced. I'm not kidding you with this. Gamma trading, I used to be an options market maker in the institutional world. I didn't deal with retail customers, only with banks. And what did we do? We did gamma trading all day long. It's something that's so super sophisticated that very few retail investors ever really understand it. This course gives you the insight into how to do this sophisticated technique. So we started from option beginner at our top bonus. This one, advanced and very super cool. Another one is, I love this. Come on. We're going to give you a new option strategy every month. So what's going to happen is you're going to receive a new option strategy every single month for 12 months, give you a month to master the strategy for the month, and then learn a new one, and then learn a new one. This is a great concept so that you can learn in a relaxed fashion. Gotta love it. I'm also going to give you 82-page manual on candlestick secrets. This is a particular style of trading using, instead of bar charts, using candlesticks. What's cool is it's got flashcards. It's really very cool because you actually get to learn just like you did when you were a kid. So it makes it super easy. You can be studying while you're sitting there on the subway or whatever, looking through those flashcards, the tutorials, the manual. It's awesome. And then finally, a very secretive part of the universe, foreign exchange options trading, where we combine foreign exchange trading with options trading, profiting from the two hottest markets. So I'm giving you 7 bonuses here. The value, if you were to go and buy those, go to optionsuniversity.com. Check them out. You'll see the price is just under $2,200. So when you sign up for just $47 a month, I'm going to give you these 7 bonuses right away. You're going to be able to access them right away. So let's repeat. You get the weekly video briefing with actionable advice. You get the 7 valuable bonuses, and all for just $1.56 a day. Come on. Really? You don't think it's worth less than $1.56 a day? Come on, man. You can't get a Starbucks coffee for $1.56, but you can get one of the best video newsletters ever. In fact, I believe it's the first video newsletter ever. But you're getting the same insights and the same techniques that I use to build that incredible track record of being the highest performing, most profitable newsletter for 5 straight years. All for $1.56 a day. This is a peanut. So what do you got to do? It's simple. You go to bit.ly/weekly market forecast. And yes, the W and the M and the F have to be capitalized. But go to bit.ly/weekly market forecast right now to subscribe. Get involved. Full money back guarantee, of course. Do it right now. You're going to really enjoy it. I'm not allowed to promise you that you'll make money. The SEC, the FTC, they'll come down on me like a ton of bricks. But I know what my track record is. I think as long as you follow the advice, I think you're going to be very happy. I'm allowed to say you're going to be happy. I'm not allowed to say you'll make money or they'll come down on me like a ton of bricks. We don't like that. So here's what I need you to do. Go to bit.ly/weekly market forecast with the capital W, M, and F right now. Go there right now, check it out, sign out, full money back guarantee, get all the bonuses, try it for a month. I know you're going to love it. Thanks very much, and I'll see you on TradeSmith. Thanks very much. Bye-bye.